I'm Rashawn 11 with KW United. This is Buying a Home, your first time home buyer's guide. Let's get started. A little bit about me. I have been in real estate since 2002. I'm licensed in Virginia, Maryland, and DC. I have a network of agents to assist you, so if you're outside of my coverage area, I'll be happy to refer an agent to you. I have about a 90% success rate to win buyer bids on homes with my advice and my real estate industry partners, as well as 50% of my business is helping first-time home buyers with their home journey. So let's begin. Let's talk about credit. So there is two different scores that people have the misconception about. First is Vantage Score. A Vantage Score is a score that you receive from websites and other apps such as Credit Karma and others. So the Vantage Score is not as accurate as a FICO score. FICO score is what the lender is going to use, not the Vantage Score. So that's the most important, is the FICO score. There is a large variance between the two scores, so it's very important not to be surprised when the score is significantly different. It could be, I've seen between 20 to 30 points, so that's a significant amount. So the lender is going to use what's called your middle score. So say, for example, you have a 651 with Equifax, a 633 with Experian, and a 678 with TransUnion. The score the lender is going to use is 651. The lender will not average the scores together. It's just whatever the middle score of the scores that you have will be. And also, if you're buying the home with another person, their middle score will be a huge factor in qualifying, even if you are the stronger borrower, vice versa. So it's more important. Whoever has the lower score is going to be the factor of what the lender uses for your qualifying. So here's a statement to ponder over before I share the answer. If you own a home with someone else, it's always owned equally. True or false? So to learn the answer to the previous true or false statement, we have to learn about ownership first. So types of ownership. So you have solo. So that's when one person owns the property alone. The owner can refinance, they can sell part or all of their interests, or they can will the property to another person. So next, there's what's called a joint tenant. So this is when two people own real estate and the interest is owned equally. What's important is about what happens when the ownership when someone passes away. So let's say Susan passes and John will automatically own the property without the need to have a will. So with joint tenant, the ownership will always pass to the next person that is on title. Typically, married couples select this option of ownership, though any two people can own real estate in this way as long as they understand what type of ownership it is and what you can do and not do. So tenants in common is the final way. So this is when two people own real estate, the interest can be owned equally or it can be different. So let's say it could be 70-30, it could be 60-40. But the most important part is what is going to happen when someone passes away. So this one is very tricky. So say John passes away in this instance. So let me back up. So John passes away and he did not have a will. And he owned the property with Susan. So now the property is not only owned by Susan because her ownership cannot be taken away, but she also owns the property with John's heirs, which can make things complicated. So when you're purchasing property, talk to the title company, talk to an attorney to find out what is the best method so you understand what's going to happen. Or make sure you have a will. But it's just easier to do joint tenant if that is your intent in the future. So to answer the previous true or false question, The answer is false. A property is not always owned equally between all parties. So now let's talk about loan types. There are several loan types. So you have conventional, typically 3% is a down payment required for first-time home buyers. FHA, whether you're a first-time home buyer or not, the amount is 3.5%. And VA loan, there's no down payment required. And USDA, there's no down payment required. However, you have to purchase in a designated area for USDA. So here's the next true or false statement. You need to have 20% down payment to buy a home. True or false? Let's find out if it's true or not. First-time home buyer programs. So in Virginia, there is Virginia Housing. It used to be called VHDA. It's taken me a long time to not say that because it's been that way forever since I've been in real estate, 18 years. So, but it's Virginia Housing. So you have the FHA Plus loan, you have the down payment assistance grant, you have the closing assistance grant. So with the grants, the stipulation is it's always an income-based requirement, but with the grant programs, you can't make over a certain amount. It's a significantly lower amount of the other loans. So that's important to know. But there is money, and those aren't the only programs. These are just the most used programs on the page. And in Maryland, there's a Maryland Mortgage Program. These is just a few of the programs that are there. They have several, but they have a down payment assistance loan, and they have the down payment assistance grant. And two, with the grant, you can't make over a certain amount, and the debt to income ratio has to be within a certain guideline. And in DC, there is DC Open Doors and HPAP. So it's several programs for you to be able to get money as well. And I have a video on that. So here is the next question. All homes qualify for all types of financing. So types of real estate. So there's a condo. So there could be a garden style, which is typically about 4 levels. There is mid-rise, about 5 to 8 levels, 4 floors. Or you could have a high-rise, which could be, 12 to 20 stories high, or higher. But that's typically to give you an idea of the different types of high-rises and types of condos that there are. And there are also condos that look like townhomes as well. They call those stackables. So townhomes, those are attached, and you also have semi-detached as well. Single family and a multi-unit, which is up to 4 units. So before I go on, the answer is false. All homes do not qualify for all types of financing. But why? Condos purchases have different guidelines and restrictions than other types when it comes to financing. If a condo community has a high delinquency rate on the condo dues, FHA and VA would not be an option. The only option would be conventional, and if the lender approved the buyer to purchase, there would be a significantly higher down payment, typically 10% of the sales price. And if you don't have the 10%, then you can't purchase it. But it's a lot of front-end work instead of going on the back end to know whether a property will qualify or not. So that's why it's important for you to have the right agent to not waste time, because it's a stressful process in itself. So the next thing, if a community is not a FHA or VA approved community, not VA for Virginia, VA financing, those types of financing would not be an option. And the third point I want to make is multifamily has different restrictions as well, although you can purchase a home as a first-time home buyer with FHA and VA. So up to 4 units. With FHA, you would have to have your 3.5% down. It would have to be your own money. You can't use a program to do it, but you can you can't purchase that. In VA, there's no down payment. So let's get started with the steps to buying a home. So you would hire an agent. I would recommend, I used to say this in reverse, to review loan programs, then hire an agent. But you should hire an agent. The reason why I say that is because a lot of times if you go ahead and get approved, you don't know everything that's available to you. And if you go with, 123 Mortgage and they have this unique program and they say, well, this is a program that you should, that you qualify for, it may be another option for you. And also, you may have chosen the wrong lender to work with and loan officer. So that could be detrimental to you. And so you need to know what programs are available. So hire an agent, make sure, that they know what they're talking about loan programs and what their preferred lenders and loan officers are, because if they've been in the business a long time, they know, and if they recommend something to you, it's the reason why, so that you don't want drama in the deal, because that you have thousands of dollars on the line. So if you have a financing contingency in the market, as I write this video, a lot of buyers they're waiving their financing contingency. So if you waive it and the deal goes sour, you are not going to be able to get out of that contract and get your earnest money back, which I'll talk about earnest money later. So you're putting your money at risk. So that is a huge thing that you have to make sure that, as they always say, dot your I's and cross your T's. It's very, 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 very important to have the right lender, loan officer, as well as agent, or the deal could blow up. I'll just say that. So then after you get your approval letter, this is a solid approval letter, not an online lender or whatever. So then you select and view your properties. Then you can negotiate and get the contract accepted. So what is the offer process? So offer process, you found the home that you want to purchase. So then you look at the current recent sales in the area. And then after that, you get an updated approval letter with the amounts, because you want to have leverage. You might not want to tell the other side that you can go, let's say you could go up to 450,000, but you want to offer 430. You might not want to tell them. So, but you can talk to your lender and your agent about what that looks like. So your earnest money deposit, that is the money that you're going to need, which I'll talk about it more in depth, but that's the amount that you're willing to put on the table as consideration to purchase. And usually it's held by the title company. Some real estate companies or agents, they want it held there, but usually it's the title company. A lot of real estate companies are getting rid of their escrow account, so title company is just easier for them to just have it, because the money's going to have to go to them anyway. So next, we want to talk about conveyances. So as we look at this picture, this microwave in this cubby hole is not attached. It's in a cubby hole. It's like in a little opening. But is it going to stay? And also, are these pendant lights going to stay here? If you don't specify what you want, you don't want to have any issues later. So if that's what you want, you need to put that in there, put that in the contract to make sure that it conveys. So that goes for TV wall mounts. If it's an island, now this island is affixed to the house, it would take the island out. But if it was a movable island, like you've seen the ones from IKEA, you want to make sure that's there. Big thing that I have seen over the years, multiple times, is a washer and dryer. I don't know why this is such an issue with, sellers taking them out. But that's important. So if you want it in there, now they might go ahead and tell you in the beginning that they're not going to give it to you, but if it's in the contract, it has to be there. Now, if it's not there and you wanted it, then you just need to make sure you read your contract. So you should read your contract ahead of time to know where everything is, because chances are everything is going to be moving pretty fast. Like once you might see a house, you might have an offer deadline, you have to move right. Like you see it at 1 o'clock in the afternoon, offers might be due at 6, so you don't really have time to be read through it. So once you hire an agent, ask them for the contract to review, just a blank one, just where everything is, and then you can just DocuSign whatever. So also, seller pay closing costs. Right now, as I do this video, this is not a seller's market. It's a seller's market. I'm sorry. It's not a buyer's market, but in a buyer's market or neutral market, you could request up to 3% of the sales price. You could ask for a home warranty. You can always ask, but if it's a bidding war season, I would recommend that you not ask, because you won't get it and you won't win the bid. So. And if you are a VA buyer, you're a veteran, then you are not able to pay for the termite inspection. The seller has to pay for that. I always tell my clients to have control over it, because this is something that is missed. If you want to do this, as soon as you do the home inspection, you want to know if there's issues with termites ahead of time. So what happens when you submit your offer? So one of three things. So it can be accepted. That means nothing changed. They signed it as is. So that means it's good to go. They've accepted all your terms, so they're good. So that's when the clock starts with your important dates and deadlines. That's when that starts. So they could counter you. So they could say, remember I talked about the washer and dryer. They may say no washer and dryer. They may say, well, I need to do what's called a rent back, which means that they need to stay in your home for 30 days after you purchased it. You can ask them to, pay you for that or not, depending on the market, what's available. So that I bring it up because I've seen that a lot of the sellers need to stay at least 30 days. They might need to stay 60 days, but that I bring it up because they may counter you on that. And in some markets, they might not counter at all. So you should always submit your highest and best in whatever market you are, because you just never know. You can't always assume or think that the seller will counter you, because they may not, because somebody else may have a better, it's always going to be better terms for the seller. That's the one they're going to take in any market, whatever is going to benefit them the most. So if they did counter you, you could counter back. You might say, oh, okay, well, I'm fine with the first term, but the second term, no. So this is my final counter. You can go back and forth, but then you'll say, okay, this is the final, so we don't want to go back and forth. This is the final term. Now you might accept the counter, and then or a rejection. Typically, in a bidding war scenario, if they don't pick your offer, then that's a rejection. I've never had a seller just reject the offer if it was the only offer on the table, but it's possible. So, the under contract process. So now you're under contract. Congratulations. So remove the contingencies. If you had contingencies in your contract, contingencies mean something has to happen in order for you to move forward to the next thing. So if you had a home inspection, you do the home inspection. Are you going to ask for items? You ask for the items. If you do radon, is the radon in the home too high? Are you going to ask for a remediation system? You should if it's high. Termite inspection. Are there termites? It's not just termites. I want to point this out. It could also be carpenter bees, any wood destroying insects. And a lot of times, sometimes home inspectors will put ants in there, because sometimes it's like an ant invasion. If it's a lot of ants on the outside of the house, it's not that it's damaging the house, but it might be an ant problem. So the appraisal. You want the house to appraise, and if it doesn't, you want to have that in there. If you're okay with it not appraising, you're willing to pay the difference. You just need to know that up front. Talk to your agent, talk to your loan officer. What is that going to look like for you? Like, do you have the money? You should discuss those things ahead of time. Like, okay, if this happens, are you willing to do that? That's what it goes to your timeline. When do you have to be out of where you are? If something does not go as planned, what is your plan B? Are you willing to do that ahead of time, instead of having to stress over it? It's like, oh, I wasn't prepared for this. This isn't gonna work. Don't do that. So then the final thing, you want to get your financing finally approved. Everything, once you'll get what's called a clear to close. The lender will give you a loan commitment ahead of time. They'll say, well, you're good to go based on all their documents that you submitted, and we're good to go. So then if it is a townhome or a single family, you would want to get a survey done, because you do want to know where you're supposed to cut your grass and not cut grass, whatever, and also where your property line ends. So that's important. And then title search. The title company will do a title search, so it's important to see, whether they do it for ownership, but they also do it to make sure that there are no other liens from the current owner and previous that haven't been cleared up. That's important to do, and you should also have owner's title as well. You review your final closing disclosure. You have to get that 3 days before you close, and then once they send you that, you will be clear to close, and then you obtain your funds for closing. Typically, you will need a certified check, or you could wire it. If you're going to wire it, make sure you talk to the title company to let them know that you're sending the money, because once the money's sent, you can't get it back. You don't want to send it to the wrong account, and that'd be issues. And then you close on your home. So, consideration. So now, a contract must have consideration in order for a contract to be valid in real estate. That's what that is. So in real estate, consideration is your earnest money deposit, similar to a security deposit, if you want to think in those terms. So earnest money deposit is going to be returned to the buyer at the end of the transaction at closing, and it's going to be credited towards the total amount you're going to need to bring. So that includes your down payment, closing costs, and other real estate closing fees. So you do get it back as long as you don't default. If you default, then you would not get your earnest money back. So now let's talk about how much money should you have to even start the process. So let's say you're purchasing a $300,000 home. You're going to need $4,250 for previewing and submitting an offer. The reason why I say that is because you have to have your earnest money deposit. So 1% of the sales price. If you're buying a new home, a lot of times they want at least 5 to 6% of the sales price, just because they're putting all their money at risk for you to build this home based on your specifications. And that they just have to have skin in the game. That's just their policy. So home inspections at your expense, $750 home, radon, termite. It could be more, it could be a little less. You have to pay for your appraisal, or they won't order it. If it's a condo, you have to order the condo questionnaire. It's about $300 or less. It might be $400 depending on the association. So that's what that is. So that's $4,250 plus closing costs. Now, home inspection, you don't get that back. Appraisal will be credited to you on your closing statement for your total closing costs, and the earnest money you get back. So total closing costs. Now, when I say closing costs, I'm including your escrow impound account included in this. So up to 5.5% total. That's what you'll need. So that's the property appraisal, that's the lender fees, private mortgage insurance, and property insurance. So you're going to have to pay for a year in advance. So a lot of times I get this question, it's like, well, why am I paying for it for a year and you're still escrowing for it? It looks like you're paying for it twice. You're not. That is the property insurance policy. You have to pay for it for a full year, and then they have to escrow for it. Because they escrow for it because in a year they have to have enough money to pay for it. It's always paid based on when you actually have closed. So settlement fees, your title insurance, your escrow and taxes, your prepaid interest, your credit report, transfer taxes, prepaid interest, credit report, transfer taxes, attorney, notary fees. So closing day, this is the big day. So I say I'll accompany you in settlement, but because as I record this video, we're still in COVID, so I might be there in spirit depending on the policies of the closing company. But hopefully you won't have any questions. The title company will be there. I would have reviewed all your documents, your numbers, because that's the most important part. Because your deed of trust, you can't make any changes to it. That it is what it is. So you bring your identification, a non-expired license. You can't close without your license or passport or another identifying source of identification that is not expired, because it would not be considered valid. So everyone that's purchasing the property has to be present. If they're not, let your agent know, let everybody know in advance, because you would need a power of attorney. And you need to bring a certified check or wire your down payment and or closing costs. So home buying timeline. So 1 to 3 months is a typical pace. It could be faster, it could be slower. So your pre-approval is 2 to 3 days after you submitted your documentation. So let me talk about this, because if the lender is just looking at your credit, that is really not an approval. Well, I won't say it's not really. No, it's not, because they haven't looked at anything. So really, I could look at your credit report and say, oh, well, I think this perfect. I haven't verified any of your assets, haven't looked at anything, haven't verified whether you even have a job. So that's not strong. So you want to have go with a lender that actually has looked at all that. So next, finding a home, 1 to 3 months, because more than likely you're gonna have multiple offers. And typically for me, it's like lucky number 7. Like you get 7 or 8 or 10. It depends on, based on what you're looking for and what's available. And your inspections, appraisal, underwritings in 3 weeks, and your closing disclosure, you have to have that 3 days before you actually close to be able to close on time. So if you're closing this Friday, you have to have your closing disclosure by Tuesday. If not, we're not closing on time. So the final true or false statement: is it free? It's free to hire a buyer's agent to help you buy a home. True or false? So let's talk about agency to find out. So the listing agent, you've seen the signs dangling in the yard or posts in the yard. So those are the agents, those are the listing agents, they represent the seller. So their job is to get the seller the best terms possible. That's their job. So the buyer's agents, they represent this buyer. They're also called selling agents, which kind of confuses people, because you see the word sales, you think seller, but no, that's just what they're called. So designated agency is when 2 agents are working at the same firm, but they represent the buyer separately. So it's, agent Susan represents Sally Smith, and then I will represent you as the buyer. Work at the same firm, that's designated agency. So you have to disclose that you're open to it. If not, then if it was a listing that you actually liked and it was represented by my office, and you said you did not want to do designated agency, then I could not sell the house to you. That's what that means. So dual agency is only allowed in DC and Virginia. That is when one agent represents both the buyer and seller. And no advice can be given, because you can't legally represent 2 people. You can, but you can't offer any advice. So you basically just pass the papers around. I've only done that twice in my career, and it was on investment deals. So would I do it again if it was an investment transaction, but not traditional? No. So now, how are buyer's agents hired? So they're an ordinance, that's what that is. So to answer the question, is it free to hire a buyer's agent to help you buy a home? Yes, it is. Thank you so much for taking the time to watch this presentation on buying a home for first-time home buyers. If you have any additional questions, you feel free to give me a call or email me at rashawn11@gmail.com.